Hello traders everywhere, Adam Houston here coming to you from the digital studios of MarketClub. Well, we had a remarkable day yesterday with Apple showing their latest and greatest products. Unfortunately, the market already knew about the iPhones getting bigger and also about the iWatch, now known as Apple Watch. Apple Pay, which is the new charge system Apple is pushing, is something very interesting and one I think we will need to pay close attention to in the future. What we're looking at is a chart of Apple, and you can see yesterday's action is right here. Let's scope that in actually to a little bit closer. You can see big range yesterday, and it's still closed lower on the day. Not a particularly good sign. Now we are higher today, but the key level to me is for the week, is how we're going to close for the week. If we close it below 98.89, it's going to create a confirmation of the negative engulfing line. Plus we had a weekly, so you should be out of this market already from around about the 97.79 level. We're currently trading 99.38, so it is a little bit higher if you're not out. Unless you're a true believer and you want to stay with the position, I would suggest exiting the position based on our trade triangles, which you can see turned red here on the weekly, saying the sideline position is in fact recommended. So let's take a quick look at the weekly. You can see a big outside week here. If it closes lower than this level here, that's 98.87. Let me just write down the screen and show you what I mean. So this level right here, this close here, is 98.89. I said 87, but it's 89 right there. So that's the close last week. If the market closes lower than that level, then it confirms that this is a very important top for Apple. So let's see what happens with that on Friday. Next market we're looking at is going to be, the next market we're looking at is Amazon, that actually flashed a red trade triangle indicating a sideline position on this stock. Longer term trend is still positive, still green from 348.29. And I think what we want to look at here is the action that we're seeing here. We're below the 50 line in the RSI, indicating some further weakness, or at the very least a trading range in this stock. So sideline position, or just trade it as you see fit. But right now it's going to do a little bit of repair work before I think eventually it's going to go higher. Interesting with eBay, you can see yesterday we had a signal yesterday on eBay to exit a long position. You can see there from 52.81. Small loss, nothing dramatic, but generally speaking, it's much lower today. So again, that's another stock that's been under pressure. Now on the bright side of the coin, we have a buy signal in, of all stocks, Target. TGT is the symbol there. You can see yesterday, or actually today, at 61.62. It's 61.76 right now. It's made the turn. It looks good, and showing a plus 100, strong RSI. Everything looks good on this stock. Who would have thunk it? But the reality is that's what the markets do. They anticipate and discount and build in profits. So let's go on to the rest of the markets. Looking at the Dow, this is the daily Dow. You can see really hasn't gone anywhere for quite some time. Just look at this. Just is like this whole thing just looks like one big trading range. Now, if it can get over here on the upside, then I think realistically it would look awfully good. However, it may just be what we consider rolling over to the downside. So got to take some care. We've got some important elements coming up. We've got President Obama speaking tonight. That could have a direct effect on these markets. We also have indications from Europe that sanctions against Russia will hurt the world economy. Whether that's true or not remains to be seen, but that's the ripple effect that's going through investors' minds right now. Looking at the S&P 500, you can see it's much the same picture. We're sort of moving along, this sort of really sort of rolling over. Not much happening there. So I think that's the other thing. So, but we have all of our trade triangles positive. You can see the monthly and the weekly positive, and indicating the trend is still up, even though we've come down in the last several days. But remember, August was a fantastic month for the S&P 500, up over 3%, and it's not unusual to see some sort of pullback from there. We've had 5 weeks in a row where the market's gone higher. Maybe it's time for a little bit of a rest there. On the NASDAQ, much the same thing. It sort of seems to be rolling over, but again, we had probably the best, I think probably one of the best Augusts we've ever had in NASDAQ for a long time. But you can see it just seems to be rolling over slowly. Let's see how we close on Friday. Lots coming out on these markets, so be careful, be careful, be careful. That's the key words I want to say to you. Really keep close stops on your positions. We're going to take a look at these markets and show you where you should be out. Okay, here's the key level on the Dow, 16,664. That's the red line. If the market goes below that, exit the position. Here's the red line on the S&P 500, and that's going to be 1,958. If we hit the red line there, exit the position. There'll be a red trade triangle that kicks in. Key line on the NASDAQ is going to be 4,486, the red line. If it goes below that level, exit positions, period. But for now, the trend in all those three indices is positive in the Dow, the NASDAQ, and the S&P 500, but it will change if we see those levels hit. So I'm Adam Hewison for Market Club. Thanks for stopping by. Every success. And I'm sure, like many people, we're watching and listening to what the president has to say tonight and how it's going to affect the overnight markets. I'll see you tomorrow.